Hello, my name is Maria Humphrey, and today I will be discussing a financial analysis case study on Cat Industries. First, let's start with a brief summary on the history of Caterpillar Inc. It originated from two California-based agricultural equipment companies headed by Charles Holt and Daniel Best in the late 19th century. From the Holt brothers, Benjamin Holt invented the Caterpillar tractor in 1906, and the Caterpillar tractor ran on metal belted tracks and not wheels, which kept the heavy-duty vehicle from sinking. Both the British and the American military services used Caterpillar machinery in World War I and in World War II. In World War I, they used the threads on their armored trucks, and in World War II, Caterpillar developed the diesel engines for the Sherman M4. In 1925, the Holt Manufacturing Company merged with the Best Company and renamed the new company Caterpillar Tractor Company. So the Caterpillar firm currently employs over 98,000 full-time employees, and it carries a variety of excavators, graders, trucks, loaders, and tractors used in construction, agricultural, mining, industrial, warehousing type of industries. I also wanted to cover something that I found that was very interesting. The Caterpillar firm was recognized in 3 different areas. First, the America's Best Employer for Diversity, Forbes 2018. Best Employer for Women, Forbes 2018, and also U.S. Veterans Magazines as Best of the Best Veteran-Friendly Companies. Now, of course, every company has great competition. Currently, there are 3 companies that I consider are good competitors to Cat Industries. First, John Deere, second, Hitachi, and last, Case Construction. While we may think that Cat Industries and John Deere companies operate in 2 different realms, actually John Deere has a few items in their lineup that match very well with Caterpillar Caterpillar Inc. Now, when we compare the stock prices as of October 14th of 2018, we can see that Caterpillar Inc. was currently at $142.12 per share. The Deere and Company stock was at $148.42, and Hitachi was at $62.19, and Case Construction was at $11.15 per share. To go over a few of Caterpillar Inc. financials as far as the financial analysis is concerned. Current ratios for December 2016 was at 1.22 and December 2017 at 1.35. Quick ratios December 2016 at 0.89 and December 2017 at 0.97. Now to go ahead and cover the SWOT analysis for Cat Industries. Here we go over strength, weaknesses, opportunities, and threats. I've identified strengths as product innovation, brand name, and distribution networks. Some of the weaknesses are low diversification, low rate of innovation, and limited connections in emerging markets. So I have identified as some opportunities diversification, concentration, and digital strategy. And of course, threats are competition and economic uncertainties. My recommendation for cat industries after completing the SWOT analysis is to ramp up its diversification and think back to its early days of innovation. With innovation comes the possibility of diversification. CAT can develop a new mechanical equipment that can be used for an industry that they have not yet been part of. Investing in research and development, and maybe including some AI capabilities can give CAT the edge that it needs to continue to succeed for many years to come. Now, to also cover the investment opportunity mentioned in the requested project. So let's discuss the company is looking to invest in a new plant and needs to determine if they should invest or not in the facility. The initial cost of the investment is $10 million, and the anticipated cash flow for the investment is estimated at 2.5 a year for the next 10 years, with the expectation that the initial cost of investment would be recovered within the 5 years. The cost of capital has been determined to be 10%, and below are the results. Here we can see that we break even at year 4. So my recommendation is to pursue the investment because the payback period is just 4 years. The IRR is 21%, which is the rate that makes the present value of the investment cash flows equal to 0. So from a financial standpoint, the company should go ahead and go forward with the investment since it will generate the 21 return in CAT industries. We can also see the NPV listed here and the payback period. Thank you all for your time. I hope you enjoyed the presentation and have a blessed day.